All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to go through the company Tattooed Chef, stock ticker TTCF. They reported earnings, and it was not what I was expecting, so I want to dive in and take a look at what's going on in the Tattooed Chef. There's some good, there's some bad, but I want to go through it all. So if you're new to the channel, please subscribe and hit the notification bell, and of course, please smash the like button. Okay, so let's start out with an overview. So this is the Tattooed Chef. They're trading at $11.69 right now. Their market cap, $984 million, so they're just under $1 billion. For the most part, over the last year, they have been over $1 billion. They're very near their low. We'll take a look at the chart later. They were down a lot ahead of earnings. The market seems to have reacted okay to earnings, but I want to dig in and take a look because, as a long-term investment, I'm going to go through some stuff that shows this company should have a lot of positive catalysts. Then I'm going to go through the numbers, and it tells a different story. So you're going to have to decide for yourself. Are you willing to hold on and do you believe in their story? Are you willing to hold this stock and just wait for it? Is this a great long-term investment? Or is it time to get out and sit on the sidelines on this one? So at the end, I will tell you what I have decided to do. And again, this is not financial advice. It really depends on your investment horizon and your conviction in this company. So before I get into their fourth quarter earnings, I just want to go through a few things in their investor presentation. So the first thing is Tattooed Chef continues to expand national distribution. So total stores. You'll see in 2019, they were in 1,600 stores. They bumped that up to 4,200 stores in 2020. They were shooting for 10,000. They ended up at about 14,000 stores in 2021. The next thing is not only are they in triple the amount of stores, but here's their annual production innovation. In 2019, they had 21 products. In 2020, they bumped that up to 38. And now in 2021, they have 73 different products that they can offer. Not only are they in more than 3 times as many stores, they have more than 3 times as many products as they did in 2019 and, almost double what they did in 2020. So these things are showing a very strong foundation in the company, building a giant infrastructure base of customers. They're growing this thing every way that it seems like they can. And then the last thing I want to add is in 2021, they just started advertising. In addition to being in all those stores and having all those additional products, they also launched a massive media campaign for brand awareness. So these feel like we're checking all of the right boxes here for a small cap, high growth company. And the last thing I'll add without digging into it, they did have 2 important acquisitions that are also adding to their product mix and their revenue base. So I'm just quickly going to hit the highlights here. 2021 fourth quarter financial overview compared to fourth quarter 2020. Revenue rose 32.2% to $52.3 million. Tattooed Chef brand product revenue increased 21.7% to $29.2 million, or 56% of total revenue. So that's about 56% of their total revenue. They do private label stuff. The whole point is they're transitioning to a brand. So they're trying to build out their brand. So I would really like to see this 56 go up dramatically. Net loss was $13.1 million. I'm not going to get too concerned about profit or loss right now. Again, this is an early stage, high growth company. So it's not like they need to be making money at this point. Obviously, you want to be moving towards profitability and see good signs, but that is not the benchmark. Right now, the top line is the benchmark. Are they growing their revenue? Are they growing their presence? And, they're doing that. 2021 full year financial overview compared to 2020. Revenue rose 43% to $213 million. So year over year, 43% growth on an annual basis. I will tell you, and I'm going to go through this, they missed their estimates by quite a bit. So I know there's a lot of factors going on in the world right now. There's a lot of chaos. There's a lot of supply chain type issues and there's a million reasons. But the bottom line is this is a very early stage, high growth company. You don't want to be missing your revenue targets. That's not a good sign. I'm going to call that one little red flag. I've got some bigger ones that I'm going to get into later. Tattooed Chef branded product revenue increased 56.7% to a record $132.5 million, or 63% of the total revenue. So on an annual basis, this was 63% of the total revenue. For whatever reason, in the fourth quarter, it was actually just 56% of the total revenue. So, I mean, ultimately, in 5 years, I view this as a company where it's 95% or 100% of their total revenue. The private label side of what they're doing is not the reason people are investing in this company. Net loss was $87 million, and there was some funky tax stuff in there. So again, I don't get too caught up in net income or net loss on these companies at this stage. It's more about growth. Adjusted EBITDA loss was $26.1 million. Again, they lost money. Okay. They're expecting to lose money again next year as well. The market is not treating small cap, high growth companies that are not profitable very well. In the first quarter earnings report of 2021, they gave an outlook, and I like that they give an outlook. Unfortunately, though, they're missing this outlook, so that hurts. They expected full year revenue in the range of 235 to 242 million. Well, we see that they ended up lower than the low end of that range at 213 million. Gross margin in the range of 20 to 25%. So this is a critical item in my opinion. I'm going to dig into this. So, by the end of the first quarter, they were estimating that their gross profit margin this year was going to be 20 to 25%. If I jump to the second quarter, so we're now 3 months later, however, their gross margin, they went down to 16 to 22%. And remember, that was 20 to 25%. So fast forward to the third quarter. Okay, now they've lowered their revenue targets to 210 to 215 million. So they did fall within this. So by the time they started giving guidance in the third quarter, this guidance turned out to be correct. So they finished right in the middle of this at 213 million and change. So okay, now once again, gross margin in the range of 12 to 14%. Remember, that was 16 to 22% in the last report. And in the first quarter, it was 20 to 25%. So they're now potentially cutting their gross profit margin, their estimated gross profit margin this year, pretty much in half at this point. These numbers are actuals. This is where they landed. Gross profit was $22.1 million or 10.4%. So there's a lot of reasons why an early stage company isn't making money, but they should be making gross profit. And especially in this industry, this is a brand they're spending a lot of money marketing. So if this brand going forward is going to be a 10% gross profit margin type of a brand, that would be a big issue in my opinion. It's not what they were expecting. It's not how they performed in the past. Their gross profit margin was higher as a private label company. So again, the question is, in the words of the Fed, is this transient or is this the new norm for them? Well, if we go to full year 2022 outlook, so this is their outlook for this year. Revenue of 280 to 285 million. So that's healthy growth. Again, high growth company, top line, I don't have a problem with their top line. They're growing their top line. Gross margin estimate, 10 to 12%. So here's my issue. They were at 10.7% in 2021, and it looks like they're estimating they're going to do something along the same lines in 2022. So now that's a 2-year trend. That's starting to turn into a big question mark in my mind. Are they going to be a 10% gross profit margin? Because in my opinion, and obviously you guys got to do your own due diligence. I don't like to pass judgment on companies, but I don't think it was ever their intention to be a 10% gross profit company. And I don't think this company makes sense at a 10% gross profit. Management needs to tell us how they're going to get back onto a path to 15 to 18%, 20%. All of those numbers work considerably better than 10%. So for instance, at 10% gross profit, if they get to 280 million, that would be $28 million of gross profit. Well, look right here. Their marketing expense anticipated for 2022 is $27 to $32 million. So they're going to spend more on just marketing than their entire gross profit for the year. Never mind all their other expenses for the year to run the company and whatever capital expenses. So they go on to say capital expenditure of approximately $20 million is their estimate. They spent substantially more than that last year. You'll see capital expenditures increased to $63.8 million in 2021. So they're having to dial that way back. They are not backing off on their marketing, which I agree with. They are trying to build a brand. This is what they have to do. So this marketing money should equate to increase in their top line, which it looks like it's doing. But the problem is, at this gross margin, I have concerns. So I'm just going to go to a quick chart that I made here. This is quarter over quarter. So in an early stage, small cap, high growth company, you want to see not only year over year big growth, but they really should be having sequential sequential growth on a quarter-by-quarter basis. So I know some of this is seasonal, and there's some arguments against this that mitigate some of this, but at this early stage, growing as much as they are, they really should not be trending downward. They started the year with $36 million sales in Q1 on their branded Tattooed Chef products. That went down to 33, so it was down 8% in the second quarter. It was up 7% in the third quarter. That's growth, but it's a bit anemic. And then in the fourth quarter, it was down 17%. So these are not the numbers that I would expect either. Other than Q1, they're going to have very good comp numbers in 2022. So that's one of the main things I'm going to be looking at. We should really see quarter over quarter and year over year sequential growth in 2022, in my opinion. And then if I look at this on a yearly basis, so their sales are growing. They went from almost $85 million in 2019 up to $148 million in 2020. That was a 75% growth. That's huge. This year in 2021, they went to $213 million. So that was a 44% increase. So again, excellent growth. Next year, they're projecting, I took the average of their two numbers, they're projecting about 32% growth. Very healthy. That's great for a high growth company. My issue is if you watch their gross margin over time, they were expecting it to go up to 20 to 25%, but you'll see it's gone from 16.1 to 15.9 to now 10.4 this year, and they're estimating something similar next year. So I don't want to beat a dead horse, but this is an issue as far as I'm concerned. I'm just going to take a very brief look at their chart. This is their chart on the one-day time frame. This goes back to September of 2021 when they were trading at about $25. So from there you can see they're down to about $11. So they're down substantially. They've trended downward all along. They really had a big pullback just prior to earnings. They've had a little bump since earnings. I don't want to get into price targets. I think I've talked about the important issues on this. The story behind this company would indicate, they're moving in the right direction and doing all the right things. But the numbers are telling a little bit different story, in my opinion. So I have not been able to reconcile those two things yet. So I will tell you, for me, I'm going to watch this company for a few more quarters and see how they do. If they can start trending some of these numbers in the right direction, then I like everything else they're doing, and they may turn into something that I would be interested in investing in. But for the time being, I have to say, I am sitting on the sideline with Tattooed Chef right now. So again, this is not financial advice. You guys need to come to your own conclusions. I've just tried to give you some information to help you guys with your due diligence. So that's all I've got for you on the Tattooed Chef. Thanks for watching, and we'll see you in the next video.